Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, entrepreneurs, executives, thought leaders, musicians, artists. I mean, you name it in the world of crypto and blockchain all around the world. And I have an amazing guest for you today. I'm really looking forward to this interview. He is the CEO at Xapo Bank. His name is Seamus Rocca. Seamus, welcome.
Thanks for having me, Jamil. It's great being here.
Very welcome. Very welcome. So let me kick things off for our listeners and ask you the first question is what is your background, and is it a logical background for what you're doing now?
I qualified as a chartered accountant in the 90s. Most of my career was in banking, focusing, worked in various global banks, focusing on emerging markets predominantly, did a little bit of a stint in treasury. And in 2017, I jumped into working into Xapo with the CEO at the time and our founder, Wences Casales. And I think it's a very logical and natural progression. I'd done a lot of big international banks. The world is becoming more truly global. And then, fintechs were of particular interest to me, the use of technology in financial services. And then Bitcoin in particular, blockchain in general, crypto, but Bitcoin in particular, seeing as something that I thought was going to be revolutionary, and which Wences had already started, building a bridge between Bitcoin and more sort of traditional financial use cases, so that people could use it every day and maximize its benefits. So for me, yeah, I think it's a very logical career progression. When I started at Xapo in 2016, 2017, I can tell you there weren't many bankers in the space, and that's not the case today. So I've seen the space change immensely over the last 6 years.
Awesome. So, what is Xapo Bank all about? It's not a traditional bank, right? And then, what's your vision as CEO?
Sure. Well, I think the vision of the company. Let me start there, and this was Wences's vision, because I joined as the CFO, and eventually Wences became the chairman, and I became the CEO. Is really that Bitcoin is going to do for money what the internet did for information, which is make it much more accessible, make it much more global, make it much more borderless, cheaper, you name it. Think about all the benefits that the internet has brought in terms of transfer and use of information and data. And we think that that's what Bitcoin is going to do for money. So we started off the company as, well, the first thing you need to be able to do with Bitcoin is keep it safe, store it safely, because if you lose the keys, you lose your coins, right? So how can we make sure that people can trust that their coins are somewhere safe? Because doing the custody of those coins yourself is fraught with dangers. But then just keeping it secure isn't enough. You need to be able to transact with it. So how do you buy Bitcoin? How do you sell Bitcoin? How do you spend it? So we embarked on a journey of becoming regulated and finding licenses that would allow us to bridge Bitcoin with traditional financial service use cases, and we found that challenging. We found that the regulatory space was complicated. We tried MTL licenses in the US, and then the BIT license came along, and then we found this thing called an e-money license in Europe. And throughout all of that journey, we thought, well, you know what? No traditional bank is going to either understand Bitcoin as well as we do, or they're not going to want to touch it because they're scared of it. So we embarked on building our own bank. So when you say Xapo Bank isn't a traditional bank, you're absolutely right. Because to my knowledge, we're the only bank in the world that has been built by Bitcoiners for Bitcoiners, as opposed to a big traditional bank that one day decides to, oh, this thing called Bitcoin is interesting, I'm going to offer it to my customers. From the word get-go, our vision and our mission is that Bitcoin is transformational for financial services and money in general. And we wanted to build a bank that builds that bridge from Bitcoin to traditional use cases. So not only do we keep it safe for you, but we allow you to transact with it in the knowledge that we're protecting you all along the way. The double-edged sword of that is that most of the people who get into Bitcoin in the first place don't trust banks. That's part of the reason why they got into Bitcoin, right? But to some degree, the issue is, and I can understand that mistrust of the big banks, but that's why our bank, and we can talk about that more in a minute, is very different to a traditional bank. We don't do mortgages, we don't do lending. 100% of your money is invested to generate interest in very low risk assets, U.S. Treasuries, money markets, with the view that the interest that you pay is on your own money. We haven't lent it to anybody else. We don't take huge amounts of risk with that money, so it's accessible to you whenever you want it. And it's a bit similar to the tenets of Bitcoin and what makes it interesting. So yeah, our vision is this idea that Bitcoin is going to do for money what the internet did for information. The whole reason for being of Xapo is to bridge Bitcoin and use crypto use cases to transform financial services. And the future for Xapo is, making sure that the people that have already made that jump into Bitcoin or crypto in general have a bank that understands their needs, their use cases, and doesn't just think of Bitcoin as a haven for terrorists and money launderers. It's got genuine financial use cases. And because we've been in the space for 10, 11 years, we understand that better than anyone, better than any traditional bank out there. So you're absolutely right, Jamil. We're not just any bank. We are the first truly Bitcoin native bank in the world.
Yeah, it's been 11 years. So I guess you've seen, like, in the beginning, maybe I'm wrong, but I wanted you to get some more clarity on this. In the beginning was, okay, let's get banks to adopt Bitcoin, or let's get more people to transact with Bitcoin. Now, I don't want to transact with Bitcoin. Like, I don't mind transacting with Ether, and I don't mind transacting with Litecoin, the stuff or XRP, stuff that's good for payments. But like, why do people still want to transact with Bitcoin? Because it is so valuable.
Yeah.
And where did that line get drawn, and where are we at now?
So that's a really good point. So if you think about Bitcoin, in the early days, people weren't sure if it was going to be a good store of value, right? So, and there was all this noise around, well, is it really effective as a payment mechanism? This, that, the other. The first question I think has already been answered, which is this bit that it's a good store of value. I think that bit, at least for me, I don't know about you, but for me, that bit is beyond question from the point of view of the hash rate of the database, the price, the adoption that we've seen. I think it's pretty clear that it's a good store of value. But like with any other asset, when you build, the value into an asset, most of us at some point need to spend some of that, or you need liquidity. So, you might have bought some Bitcoin 5 years ago, in which case, lucky you're in the money, you've got some money stored in Bitcoin, but you also might need to buy a new car. You might need to, do up your house or put new floors on it, and you need to spend some of that Bitcoin because unfortunately life gets in the way, Jamil. You might have kids, you might need to put them through college, right? And all of a sudden you go, well, how do I sell some of those Bitcoin to be able to live in the real world? Because unfortunately, we don't live in a world where everybody accepts Bitcoin and you don't need any intermediaries in terms of financial services, right? So that's where I feel that we come in. Today, most people either have some of their Bitcoin in self-custody, or you might have it on an exchange. But the moment you try and get it out of those two platforms into a traditional bank or financial services, they won't accept it. It costs a huge amount of money. You've got limited options. The bank rails get shut down. So it's frankly quite challenging to be able to spend it as and when you need it. So that's where I feel that's a good bridge that we've built. On the one hand, if you just want to hold your Bitcoin and keep it secure, keep it safe, we at one point, before we sold the institutional business, was the largest custodian of Bitcoin in the world. We had 900,000 Bitcoins in our vaults. That's what we were known for, until we decided to sell the institutional business and focus on retail. So if you want just a safe place to keep your Bitcoin, you'll be hard found to do better than Xapo. But if life gets in the way and you need to spend some of those Bitcoin, well, you have a debit card that you can use to spend some of those Bitcoin. You can convert it at a great price into dollars. And you transact in multiple currencies if you need to make payments. But also, because we're crypto native, you can make payments in Tether, you can make payments in USDC. So we do the things that you would expect a crypto native bank to be able to do, and allow you to spend the money freely when you need to, as opposed to having to take it out of cold storage yourself and run the risk of losing some of those coins, and then having the difficulty of, once it hits the financial system, the first thing the bank is going to ask you is, where did the money come from? Right? They don't have the know-how to figure out, using Chainalysis and Elliptic and other blockchain technology, that you've been holding it for a while in cold storage, and it's just that the value has gone up. We can tell that straight away because we've been in the industry for 10 years, right? So we've been using blockchain technology to do AML monitoring since day one. In fact, when you talk about some of those blockchain monitoring companies, we were, if not their first customer, we were up there in the top 2 or 3 first customers, right? So the experience that we have in doing that means that you can transact freely when you need to. And that makes, I think, the use case quite compelling.
Said a couple things there. I'm going to follow up on it a little bit later.
Of course, sure.
And they, like you said, they're different than the common thinking. So the first one, before I get into that, I want to first talk about some research that you did,
Sure.
right? You conducted recent research into your members' deeper motives investing in crypto. What were some of the insights that came out of that research?
Yeah, well, a couple actually. One of them was the demographic. We often associate crypto as something that is, mostly 20 to 30-year-olds are interested in. Younger generations are interested in crypto. They're more technology savvy. They've grown up on their mobile phones. They understand technology better. So as a result, it's crypto is seen as a young person's game. And one of the things that we found that actually, maybe is because we're all about security, we're all about the bridge to financial services, we're all about offering a very simple UX on our app, on our platform. We found that our demographic was, yes, we've got some customers that are of a younger generation, but we also have a lot of our customers, in fact, our more valued customers are all above 40. And when we interviewed them, we asked them, how do you view Bitcoin? None of them viewed it as a trading asset. They all viewed it as a long-term investment. They all viewed it as, hey, I've always wanted to buy a property. I would view a property as my sort of retirement plan because I can get capital gains and rental income. So a lot of people were thinking about, buying property with their Bitcoin. So therefore, they were waiting for the right price of the market, both for Bitcoin and property itself. And others, and you know what, Jamel, I'm going to put myself personally in this bucket as well. I'm turning 50 next month. And like I said before, I've worked in financial services my whole career. I've worked in 7 different countries and loads of big blue chip companies. And as a result, I've never built up a pension, because when you work in different countries, the pensions are a thing of the past, in my view. You worked in the same company for 30 years and you build up a pension and then you retire. I don't think that's going to exist in the future because we need to be mobile to be able to go where the work is, or we need to work remotely. And as a result, this idea of building a pension pot is getting harder and harder. And I've experienced that myself personally. So when I joined Xapo, when I first started looking into Bitcoin, my view was, well, look, the downside risk of Bitcoin is quite low. So I bought my Bitcoin at $5,000, right? So you go, well, the downside risk from 5,000 for it to go to zero. Of course, there was a probability that it could happen, but it's, you know, it's relatively low probability. Whereas the probability that the price goes up is much, much higher. So I didn't remortgage my house or anything, but, you know, I put considerable amount of money into Bitcoin. That is now my pension. And I think that I'm not the only one out there where that has happened. I think what we're seeing in our customer base is people who bought Bitcoin, maybe not in the last 12 months, you know, crypto winter, things have slowed down, but people who bought their Bitcoin 2, 3, 4, 5 years ago are now seeing that this asset, it has, you know, a lot of long-term potential in terms of the store of value and price appreciation. And as a result, it's the most valuable asset that I own today. So I'm viewing my Bitcoin as, well, it's either going to be my pension slash my retirement plan, or something that I buy a property with, which in and of itself is also for my retirement planning. And you know, I'm one of the oldest, if not the oldest person in the company, as you can imagine, as the CEO of a fintech and a crypto company. But I've what we found is that more and more of our customers are more sort of that 40 plus age group with similar financial needs in mind, as opposed to maybe the younger generation that want to trade and want to look at, you know, different currency pairs and whatever, and they're more likely to be excited by exchanges than they are by something like Xapo. But again, you know, our view is, and this is why we've built Xapo the way we've built it. You know, there's nothing wrong with trading. If you want to trade, by all means, give it a go. And there's plenty of exchanges and platforms out there to do that. But you know, most research and most logic would dictate that long-term investing is the most secure way of building your wealth. So we're building a product that encourages people to build and grow their wealth. You know, that's why we offer a savings account that pays, you know, 4.1% interest. We pay interest on your Bitcoin, by the way. It's only 1% at the moment, but, you know, hopefully in the future we can pay more. And we're going to release other product features that are much more geared towards building and growing your wealth as opposed to trading.
You said the magic word. The magic word is pension, right? So yeah, so and I told you when I was at AIG, I did the C card platform and I studied Dodd-Frank and all that stuff. And one of the things that happened here was, you know, because over the last decade in the US, a lot of the executives, you know, froze pensions. And because they froze pensions, that triggered something in their executive comp where they paid out a lot more, you know. So a lot of people had their pensions frozen, and eliminated pensions. So that's no longer an option, right? But people still need to retire.
Yeah.
So, you know, how are your members using Bitcoin as that retirement investment, right? And looking at the current trajectory, the way the market is right now, comparing right now to 2017 and 2021, it looks like a different animal. It doesn't look like Bitcoin's going to go through the 4-year cycle. You know, it looks different to me. I don't know if it looks like to you, but how should they be viewing current market cycles with their need for this pension replacement?
Yeah. Well, I think that the secret is in viewing it as a long-term asset. You know, we know that Bitcoin price is volatile. And it's all too tempting when the price goes up to sell. And I think the people who have done well with Bitcoin are the people who resist that temptation and just hold it. So what we're seeing with our customer base is, you know, we've got customers that have been with us from day one, and they just hold Bitcoin. And occasionally, when there's a need, they transact. You know, maybe they sell a little bit, or they spend it with their card, or they turn it into fiat, or make a payment with Tether, whatever their financial need is. But by and large, they're hodlers. You know, they have a long-term view on Bitcoin, and they're just letting price appreciation do the rest. So from that perspective, you know, if you're an early adopter, you have an advantage from the point of view of that. If you're buying a Bitcoin at $5,000, your downside risk is a lot less than when it's $25,000. But then again, that depends on, well, what's your overall wealth? depending on your overall wealth, $25,000 could either be a lot of money to you or it could be a drop in the ocean. It depends on the individual, of course. But then you got to look at, well, what do we see as a potential future growth of the asset class? And I think that Bitcoin versus other crypto is on a completely different league, right? For many, many reasons. If you think about the fact that, Bitcoin is finite, 21 million will ever be mined. It's sovereign, no government can control the protocol, and it's secure because of the power of the database and the hash rate. So all of those things make Bitcoin much more interesting and as an investment product than other crypto. So for example, a stable coin is an amazing instrument to facilitate cross-border payment, but it's not a store of value. You can't use it as a pension instrument, right? So, there's many different use cases within crypto, but sometimes we use that word crypto as, all being mashed into one. And if you've been in the space for a while, that's probably not the right way to think about it. So if you're thinking about investing, if you're thinking about long-term views, then it's difficult to look past Bitcoin as the best asset class out there. With other crypto, Ethereum and Cardano, Polkadot, there's certainly an element of, it almost feels like you're investing in technology. Nothing wrong with that at all, right? Because there's going to be loads of use cases with that technology, but I think it's a little bit of a different animal to Bitcoin. And stable coins, same again. So if we're thinking specifically pensions and your story of what you've experienced in the US, then having an allocation of your portfolio into Bitcoin would feel like a risky but sensible thing to do. Why? Because, and depending on your risk appetite, that could be 1%, it could be 5%, but, nothing crazy. You're not remortgaging your house or anything. But the upside potential is exponentially larger than the downside risk.
I agree. So you do see Bitcoin as a solution to the global pension problem?
Well, I think, it certainly, at least to me, in my experience, it seems better than banking on big global corporates and hoping that they're going to take care of your retirement. I just think that's a little bit naive. And I've experienced that myself personally. And I'm, in my situation, it was different to US companies and them freezing pensions. Nobody's ever frozen my pension, but the world is very global these days. I had to move around in my career to follow my career path. I worked in New York, I worked in Singapore, I worked in Australia, I worked in London. So I had to move jobs, I had to move countries, different rules, different tax regimes. And it's like, it's just, so if you want to follow a global career path, it's impossible to build a pension pot. And then if you work for the same company for 25 years, who's going to guarantee you that that company isn't going to suffer a financial crisis and then, have to block your pension, even for a reason that might be beyond their control? But, in your example, it was AIG, right? But it could be many other companies. So I just think it's a bit naive to trust your pension and your retirement planning to a corporate or to the state. I mean, in Europe, it's very, very different beast. I'm European, a very different beast to the US, and I've lived in the US for many years. But I understand the differences in psyche between the two. I think in Europe, by and large, people tend to rely a lot more on the state. I think that's probably the understatement of the year. But there's still this naive mindset that, well, I'm entitled to a pension, and I can't believe that the government wants to change it to everybody above 65 or 70 or whatever. I think we're all living longer. Governments are printing money left, right, and center. I just think it's naive to think that you're going to turn 70 and the government is going to bail you out, give you a pension. And I also think it's naive to follow a career path where you're in the same company for 30 years, just waiting for the day that you retire. I'm not wired that way, but I think the world is changing in a way where that's just not even an option anymore. So as a result, I think we all have to take, investing and pension planning into our own hands. And like I said before, I don't think, we should all sell all of our assets and bank 100% of it on Bitcoin. But, I think a sensible allocation of your wealth into Bitcoin as an asset class, it would almost be irresponsible not to do it because of the upside potential being exponentially so much larger than the downside. Let's look at, let me give you some simple numbers, right? So 5-6 years ago, when I started in Bitcoin, most of the big banks that I spoke to try and build relationships with or whatever, would almost like laugh you out of their office, right? Because, oh, you're in this Bitcoin thing, it's never going to go anywhere, waste of time. They're all now looking at crypto. They've all got institutional desks. And not only that, but you can Google it yourself. They're all predicting the price of Bitcoin over the next couple of years. And I think the most conservative one out of all those predictions is something like $140,000. That's like the most conservative prediction, but this is on a 2 to 5 year view. The price of Bitcoin today, I mean, it changes, but it's roughly between $25,000 to $30,000. So let's assume that you buy a Bitcoin today at $25,000. The probability that that asset goes to zero, I don't know the exact number, but I'm guessing it's probably 10%. The probability, if you listen to all of the top 10 big banks in the world that are predicting Bitcoin prices, the probability that it goes to above $100,000 is well above 50%. So, any asset that you can buy relatively easily and has the ability of being at least, 4 times the value that it's worth today over the next 5 years. I mean, I can't think of any other asset class that's going to give you that kind of a return, not in the current economic climate. So I think that's what we're seeing with our members. This is not me sort of preaching. I just think this is what people are figuring out. This is what they've worked out. And we're seeing a complete transformation of people taking financial matters and financial freedom into their own hands.
I agree. It makes sense. And you talked about institutions, what they're saying, right? And you have an institutional background, and so do I. And you said earlier, but it's just a little surprising. This kind of took me aback by surprise a little bit, but I want to get into it. Is you have made a shift from most people want to go and have institutional clients. You want retail clients, right? Yeah. Why is that? And what are the forces that are driving retail adoption of crypto that make it that way?
Yeah. Well, I think the institutional business and the retail business are two very different animals, right? And the institutional business, is very much a B2B business, and you're trading an asset class, and you got loads of financial instruments. Of course, at the moment everyone's talking about Bitcoin ETFs and Bitcoin futures and derivatives, and that's kind of what the institutional space will do, which is trade the asset between each other, trying to figure out ways how to make money, make it accessible to other institutions and what have you. And there's nothing wrong with that, right? But Wences and I had sat down, and I remember the conversation. It was in Chile, of all places, and said, "Well, is that what we got into this business for?" And I said, "Well, from my perspective, no. I left a retail bank because it was a very big traditional retail bank, and I wanted to work in fintech and leverage technology and improve financial services, financial freedom. Just sort of take banking to the next level." And for Wences, it was exactly the same thing. For him, it was personal. He's Argentinian. He's seen hyperinflation many times over his life, and people losing all of their savings and all of their wealth to that hyperinflation. So for him, he discovered Bitcoin well before me. For him, it was almost like a life mission. And for me, it was just, well, what's going to get me out of bed in the morning is something that's going to be life-changing for the people that it touches and that are involved in this space. And that's not the institutional space. That's just more of traditional financial services. That's not innovation, in my view. That's just, okay, we have all these asset classes and financial products today. There's this new thing called Bitcoin. It's interesting. So let's put it into our suite of products and trade it with one another. nothing wrong with that. But I've done that before. That didn't motivate me to sort of build Xapo Bank and build a product and build a bank that solves a pain point for real people like you and me, which is being able to take control of our own investment strategies, being able to spend our Bitcoin freely whenever we want to, without having to take it out from under the mattress on some sort of hardware device where we're storing our keys, right? I wanted to be able to transact with the financial world in a way that we're all accustomed to with that freedom, and sleep well at night. And I thought, well, this is a product that people will want. This is a product that other people will need. And I think that that's much more motivating, Jamil, solving people's pain points than building an institutional product.
What you said there actually goes into my next question because it's commonly known for those in crypto that, not your keys, not your crypto. I think we all experienced that by putting our money into, FTS or anywhere else that went belly up, Um, so why is it important to have a regulated bank, like Xapo Bank, store your crypto instead of doing self-storage through your own wallet?
Yeah, I think, look, we kind of touched upon it before a little bit. I think you got to respect people's views, right? I'm not here to try and convince anybody. If somebody thinks that, self custody is the way to go, not your keys, not your coins. I've met many of those kind of, people with that mindset, and I respect it. I understand it completely. But most of those people tend to be quite technical, as in, they understand Bitcoin. They're technical enough that they can set up their own MetaMask or Ledger accounts and link it with the latest technology, and they're quite technical. That's not going to lead, in my view, not lead to mass adoption, right? My mum's not going to do that, right? My wife isn't going to do that. People who aren't technically savvy, and most of us are not technically savvy to that degree, are not going to go through that pain to be able to figure out how to store your own coins, keep them secure, and then transact on the day that you need to. So I think for the industry itself, there needs to be a Xapo Bank to enhance mainstream adoption, because not everybody is that technically minded that they're going to want to do it themselves, right? So for the people who want to do it themselves, we respect it, we understand it. What I would say is, be careful, because history is plagued with examples of people that have lost their keys or have lost their hardware devices, and as a result, they've lost their Bitcoin. So if you have a regulated institution that has a duty of care to the customers, that has capital, that has a Bitcoin reserve of the size that we have, being early adopters ourselves, we've got a large Bitcoin balance sheet that gives you assurance that there's some capital protection for your asset. It means that you've got somebody who's been in the space for a while as a custodian, dedicating itself to keeping Bitcoin safe and helping you transact. FTX was not built for that. FTX was a trading platform that was, greedy, poorly run, poor risk practices, blew itself up. It's very different to, a bank that's doing custody of your Bitcoin and allows you to transact. Of course, the element of trust comes into play, but that's why I think that, if JP Morgan decided to open up a retail account that offers you Bitcoin tomorrow, I think a lot of people would probably distrust that. Why? Because where's JP Morgan going to get their expertise from to handle Bitcoin retail accounts? Right? They've never touched it before, whereas we've been doing it for 11 years. So our entire infrastructure, team, know-how, and people is geared towards handling Bitcoin, towards handling Bitcoin transactions, and supporting people in the space. So I think there's an element of, trusting the institution, and we understand that trust has to be earned. It's not like that trust is something that you fall out of bed and people are going to trust you overnight. But I think that we've done enough in this space over the last 10, 11 years to show people that, we've never been hacked, we're ultra secure, we're highly regulated. And not only that we understand the pain points that people in the crypto and Bitcoin space have, which is why we've built a bank that focuses purely on serving their transacting needs, which is something that the traditional space will do one day, but it's not going to do for a while.
I agree. An easy follow up would be why shouldn't we trust banks? But I'm not going to go there because some people do. A lot of people actually do. There were some blowups over the summer at banks.
Yeah, yeah.
Silvergate, and there were some others, right? And those were, Bitcoin friendly banks, right? Um, what are the like? What are the risks? Like, not just like why should we trust banks, but what are the risks inherent in us wanting to trust banks that they're not and haven't addressed yet? And then, given the global situation nowadays, what risks still haven't been addressed and need to be addressed?
Yeah. Well, I think, look, most banks are set up to do credit intermediation and run a maturity mismatch. So that's another way of saying lend to people and essentially take your deposits, which are, short tenor, you can take them out overnight, and lend them to people for an extended period of time. That in and of itself has risk, right? Because any bank in the world today, and there is one exception, I'm about to tell you which bank it is in a minute, you won't be surprised to learn who it is. Any bank in the world today, if all of its customers knocked on the door and said, I want my money back, you would shut that bank down. There isn't a single bank in the world that has 100% reserves to protect all of its customers' deposits. Fractional reserve banking, as we call it, which essentially means, look, we've got liquidity reserves, you've got capital, you've got, deposit guarantees, there's loads of protections. But at the end of the day, for an economy to grow, there has to be credit intermediation, as in people need to borrow to build businesses. People need to borrow to help the economy grow. So as a result, governments encourage banks to lend to make sure that economies can continue to grow. The problem is if you have economic troubles or if you have a poorly run bank, that bank can blow up, which is why governments normally step in to try and prevent that from happening. But the whole system is built towards helping economic growth. So that system inherently, therefore, is risky. For that reason, when we built Xapo Bank, we said, well, we're not going to lend. Well, what is the reason for being? Well, the reason for being is, why do people hold Bitcoin? You want to hold Bitcoin because you want the price to grow up. You've got a store of value. What you want to keep it safe. Well, people are going to want to do that with their dollars as well, because dollars at the end of the day is still the currency of the world. Most people around the world, even outside the US, Latin America, Asia, Africa, will hold dollars as the strongest currency in the world. Now, for Americans in the current economic climate, you might think that, that might not be such a good idea, right? Because there's so much printing going on. But for the foreseeable future, the dollar is still the reserve currency of the world. So we designed a bank account that says, well, we're not going to lend. So all we're going to do is we hold our customers' deposits and we invest it in short-term assets, money market funds, US treasuries, cash liquidity. So we can liquidate our entire balance sheet within under a week. So that means that if all of our customers knocked on our door tomorrow, we could immediately repay all their money. There's no other bank in the world that can do that, right? And well, it's very simple for us to make money. We go, well, look, if we're earning 5% and we're paying our customers 4.5%, we earn 0.5%. That covers our costs. It's a very open and transparent way of doing banking, which is, look, instead of hiding fees and trying to screw you left, right, and center, I need to make money to survive, right? So there's a subscription for the service, so you get an account manager and whatever else, as in being open and honest about, this is what you pay for, this is what you get, and then this is how we're going to make money. So you can, and you can rest assured that your deposits haven't been lent left, right, and center, and therefore your money's secure and you're earning a return. So if you mirror that and then the Bitcoin custody, you got the best of both worlds in one bank. No other bank in the world does that right now. So when you said before Xapo Bank is unique, that's the understatement of the year, Jamil.
You actually made things click for me, because the other platforms that I mentioned were paying people 10%, 13% interest. So they were hypothecating users' deposits. You, on the other hand, buy treasuries paying 5%, and you lend out and you give out interest less than that. That makes sense to me.
It's super basic, right? But you know what? Sometimes simplicity has value. It's a bit like the Xapo product itself. We have designed for people that are not technical, that don't want to go out and spend their weekends figuring out how to use MetaMask and whatever else, which, by the way, can still get hacked if you don't, ask Mark Cuban if you don't believe me. So, you can still get hacked with those approaches, whereas we spend a lot of investment into technology, into keeping your Bitcoin secure, to avoid getting hacked, to keeping them in cold storage, and we're open and transparent about how we do that. It's all on our website. We've been doing it for a long time, so we're best in class at it. We've got one of the world's largest Bitcoin reserves as capital to protect you. We've got 29,000 Bitcoins in our reserves. Most exchanges don't have anywhere near that. We've got a banking license, so our deposit guaranteed. Your money is held in dollars in money market accounts in US Treasuries, earning interest, and we're paying most of that back to you. So we've built a very simple product with a very simple business model that hasn't been done before.
It makes a lot of sense to me. Awesome. So I want to thank you very much for your time. I really enjoyed speaking with you. This is a great conversation. And yeah, it made a few things click in my head today. So thank you.
You're very welcome.
I have one last question.
Sure.
This is probably the easiest one I asked you is this. How can find more about you, about Xapo Bank? How can they become customers of yours?
Sure. So all information about Xapo is on our website. Anybody who wants to become a member can just go to the website and apply. We serve the entire world except OFAC sanctioned countries, of course, for obvious reasons. The Irans and the Russias of the world. And we took a view, and this is unfortunate for you, Jamil, because you live in the US, we took a view not to serve the US. And the reason why we do that is because we used to have a license in the US and serve American customers for a number of reasons. One is because, this idea of a dollar bank account with Bitcoin, we thought, well, people in the US can have access to any bank and maybe buy Bitcoin or what have you. It never occurred to us that people might not trust traditional banks because of the fractional reserve banking component, but that's another conversation. But the reality was that the nature of what we did in the US was very complicated because the regulatory landscape was so unclear, and we made that decision in 2019, 2020 to sort of leave the US and focus on the rest of the world. And in hindsight, I think we were proven right. The regulatory landscape in the US has gone worse rather than improved. It's being well documented with the SEC and whatever. And look, when I joined the space in 2016, 2017, I remember going to consensus in the US, and it was all talk about, is Bitcoin a security? Is it not a security? 6, 7 years later, and it's still the same conversation. It hasn't progressed. If anything, it's gone backwards. So I think, unfortunately, we don't serve US customers or US persons, because the moment that you do, you're pretty much regulated by the US government. And we took a view to say, well, look, the world is a big place. We're going to serve the rest of the world and see how we get on. But anybody else that wants to join, just go to our website, xapobank.com. Just click apply for membership. We'll ask you a series of questions, more to do with how much you earn, what do you do for a living. And the only reason why we do that is because we've got a profile customer. So then when we see transactions going through the account, that we kind of match what you told us versus transactions, so we can make sure that your account hasn't been taken over or fraudsters haven't hacked into the account. So there's a lot of questions that we ask for security reasons. Just saying that so that people don't get spooked out by the questions that we ask. They're very normal KYC questions that we have to ask, know your customer questions. And once you're onboarded, that's it. You've got, the best Bitcoin security the world can offer, paying you 1%. You got a dollar deposit guarantee bank account that's offshore, based here in Gibraltar, paying you 4.1% on a bank account that doesn't do fractional reserve banking, that allows you to interact with your Bitcoin whenever you want, that you can send and receive Tether, USDC, make payments and receive euro and sterling. And you got a black debit card that allows you to spend your Bitcoin whenever you choose to. And we got a whole range of other wealth management and financial products that would allow you to invest and grow your wealth in the not too distant future. So maybe we can talk about those when we launch them in a few months.
Definitely. I'd love to have you back on.
Awesome. Lovely to meet you, Jamil. Take care. Have a great weekend, buddy.
Yep.
Cheers.